The surge in AI demand is driving a global infrastructure build-out, supported by an expanding and diverse set of growth opportunities, spanning hyperscalers, AI labs, AI natives, enterprises, and sovereign customers. We expect to grow revenue by approximately 70% in fiscal 2028.
Well, let's get more now with Bloomberg Tech Europe and opening trade anchor Tom Mackenzie. Tom, just put these earnings into context for us, because we get that they're good, but for anyone who didn't stay up late to listen to them and pass through them, just how strong were they? Are they strong enough to put the AI bubble fears to bed?
Well, I think that soundbite from the CFO of Nvidia really underscored the forward strength that they are seeing, and that's so consequential for the broader ecosystem and frankly for the global economy in many aspects. So what she was pointing to was 70% revenue growth in fiscal 2028. That's next year, the calendar year of next year. What was really interesting is that she could have outlined a stronger revenue picture if they weren't supply constrained. And so this is a company that is seeing constraints across the supply chain. That's what Jensen Huang said. And they could be delivering even more revenue if that wasn't an issue. So it's not a question about the demand. The demand is red hot. It's how they supply that. I'll bring it back to the quarterly earnings, the second quarter earnings. So revenue's more than doubling to more than $96 billion, almost $100 billion in a quarter, year on year. Profits coming in, earnings per share, $2.22, well above the estimates. And the expectations for the current quarter also beating the estimates as well. If you're looking for any flies in the ointment, it's that margin story. We talked about the reporting around pushing up prices up to 15% for some of their key customers. Margins, the CFO said, would be squeezed in the months ahead. So if you're looking for any weakness, maybe it's the margin story. Margins could get down to around 71, 72%. Now, 71% margin, most companies would take that in a heartbeat. But we're going from 75% margin, gross margin, to 71, 72% in the months ahead, according to the CFO. So possibly that is something that those who are a little bit more negative on this stock will focus in on. But in terms of the demand story, it's incredibly high. This is a company that needs the rest of the ecosystem. It needs TSMC, it needs Samsung, it needs SK Hynix to spend on CapEx to be able to ensure that they get the memory chips and the production from the fabs to be able to meet that demand.
OK, so really incredible. And then we've got Nvidia stepping back into the China market. So how important is that as a share of revenue, or is it really more about the symbolism of getting back into China?
It is a bit more about getting that toehold back into China. And just taking a step back, this is a US administration, not just the Trump administration, the Biden administration, who have gone back and forth in terms of how far they restrict and to what extent they restrict chip sales into the Chinese market. The bottom line is they can now, they've signed off the Trump administration on a certain number of H200. Those are two generations behind the current chipset, the Blackwell chipset. The H200 can now be shipped into China in certain quantities. The other side of that is that China has to agree to those shipments, has to sign off, and their companies actually buying them. What we've learned is that there is now revenue coming through from China for Nvidia in the billions, about $7 billion US. So it's not insignificant, but it's still less than 1% of their revenues from the data center. So it's an area, of course, Jensen Huang's been lobbying hard in Washington to get access to that Chinese market. It's paid off to some extent. They really need the Chinese authorities to go full bore and sign off on their companies buying these chips in greater quantity. So far, we're not seeing that, but this is a company now that has that toehold back in the Chinese market.